welcome back to Dukas Copy TV and another edition of Targets in Focus, where I will be taking a look at how the weak pound is affecting Scandinavian currencies with Charles Purdy, Director at Smart Currency Exchange. Charles, thank you for joining me. Let's start by taking a look at the pound. An industry report showed UK employment confidence declined in January. How are you currently viewing the pound?
Well, I think it's fairly friendless at the moment. Not much support out there for the pound. I think obviously there's a great worry about a triple dip recession here in the UK. There's always also worries about the AAA credit rating. There seems to be a great lack of good news in the UK. Retail sales figures disappointed last week, so there's not much there to support the UK. I think, again, it's just business confidence has slipped away. I think we saw it in Europe over the first half of 2012. Business confidence began to seep away, and you saw the euro weaken. I think you're seeing the same thing in the UK now. The UK economy, they're not. No one's positive about it. It's the business confidence is seeping away, and obviously sterling has lost ground. Certainly across the board. Significantly against the euro and significantly against the US dollar. Because
the pound has, as you mentioned, been so weak so far this year, is this a good time to sell Scandinavian currencies?
I don't think so. Again, I think you have to look at the individual Scandinavian countries. The Norwegian Krona is supported by a phenomenal oil industry. Huge reserves, both of oil and of cash, and it's very difficult to know or to believe that the UK, certainly the pound versus the Norwegian Krona, is going to appreciate. It's been trading in a fairly narrow range for the last 2 or 3 years, which is not unusual for commodity-backed currencies. If you look at the Australian dollar, New Zealand dollar against sterling, they've all been in a narrow range. The Norwegian Krona has been from sort of 8.5 to 9.5, going backwards and forwards. At the moment, it's obviously closer to the 8.5 figure, but again, the one problem with appreciation of a currency like the Norwegian Krona is that you'll see it begin to hurt exports of other products other than oil, and that's what I think the Norwegians are worried about. So although I certainly don't see an upside of buying of selling Norwegian Krona vis-a-vis sterling, I don't see much appreciation in Norwegian Krona against sterling in the short to medium term.
The Swedish Krona has grown in strength over the past few weeks, but economists are warning that the strength of the currency could prove damaging to Sweden's economy as it drags on exports. Do you think this is a real worry for Sweden?
Well, I say that's the counter sort of intuitive situation that arises from these countries. Although the pound is weak, if the Swedish Krona, if it appreciates it, that does make exports more expensive. And that obviously hurts the Swedish economy. I think, the extreme example is obviously the Japanese yen, which has appreciated for quite a while. And you can always get the feeling that enough is enough for the new Prime Minister and the new Finance Minister. They've said, we just can't, our exports are being decimated because of the strength of the Japanese yen, and it's the same thing in Sweden. Their exports are hurting because they're seeing the Swedish Krona appreciate, and it causes exports to fall. It's that's why we seem to be in the middle of a currency war where everyone wants their currency to appreciate to boost their exports, because the economies at home aren't as buoyant as they would wish.
Inflation unexpectedly accelerated in January in Norway. Does this have a large impact on the currency?
Certainly it does, because the belief is that to fight inflation you have to increase interest rates. And to increase interest rates will obviously be an additional boost for the currency. So again, you get into certainly this current climate, into a fairly vicious circle where you don't want your inflation to be high, but you don't want your currency to go on appreciating. But to fight inflation, you have to either increase interest rates or reduce the amount of money circulating in the finance system. And again, that's why I say Norway's in a difficult position, because it is.
Lastly, the Danish central bank raised its benchmark interest rates for the first time since July 2011 to defend the krone's peg to the euro. Are investors less afraid of losing money on this currency now?
Again, I think it's a very difficult position for the Danish Krona, because as you say, if there's a peg with the euro, trying to make sure you live within a certain range. The range is always a difficulty, especially in these volatile times. And again, it's not got the huge resources of Norway, natural resources of Norway, so it doesn't have that ability to control its own destiny as quite as as the Norwegians can. And I think it is going to be very difficult for them to maintain that peg in these volatile times.
Charles Purdy there with insights into Scandinavian currencies. There will be another Targets in Focus interview on Wednesday to keep you updated. Take care.